All right, so jumping away from Form SSA 3368, which is completed during the initial application process for Social Security benefits, whatever date that you're alleging that you became disabled, if there's any work after that date, Social Security must evaluate that work before your claim can be sent to DDS for a medical determination. So the role of Social Security is to make all non-medical determinations in regards to ensuring that the criteria is met for Social Security disability. So when you have work after your onset date, depending on the type of work that you do, whether you're self-employed or a 1099 employee, which is also, that's an independent contractor, but Social Security also, and the IRS also views that as self-employment, or a W-2 employee, that will determine what form you need to fill out. So right here is Form SSA 820. This is a public form that can be found on Google. This form is completed for self-employment and 1099 independent contractor work. So on this form, it says, please tell us about your work since, and this would be a date, right? So whatever date you're alleging that you became disabled is the date that you're going to put in here. So you can receive Social Security disability and still work as long as that work is below the restricted amount. So that's what this form serves as, or to make sure that whatever work that you had either is disqualified, or I should say disqualifies you from receiving benefits, or if it's, again, below the amount, they make a determination. So you would fill out this form, and then Social Security has a separate form where they make an official determination that your work is or is not below the restricted amount. So going over this form, income reported for you, so self-employment, you're going to put either your business name or the type of work that you're doing, the year that the current year, or maybe the previous year if maybe you've been out of work for a little bit, and then what your yearly income. This would be your net profit. So as a self-employed person or a 1099 employee, independent contractor, you might have made, let's say, $10,000. But let's say that you had $8,000 in expenses. This means that your net profit is $2,000. Okay? So if you had a $2,000 net profit, the tax burden would be I believe it's 15.7%. So you would, so $2,000 times 0.157. That means that you'd have to pay the IRS $314 to get the credit for that $2,000. Right, is essentially how that would come across. And then what the IRS will report to Social Security was that you only made $2,000, not $10,000, and that's what you paid the taxes on. Okay, so that's how that would work. So you scroll down here, a name of claimant or beneficiary. This would be you or the person maybe that you're helping file. Make sure that you indicate whether this person is blind or not. This would be like legally blind. So this would mean, in Social Security's view, if your vision in your better eye, so this is your good eye, if your vision is worse than 20/200, then I believe that's considered to be legally blind. If it's better than that, then you probably won't have statutory blindness as a medical determination. And if you are found to have statutory blindness, then that allows a different amount of money that you're allowed to earn when you're on disability. So you can see here, this is the fact sheet for 2023. In 2023, Social Security disability thresholds for the non-blind. In 2022, it was $1,350. In 2023, it's $1,470. For the blind, you can see it's significantly higher. And the primary reason for that is because usually if you're blind, you have a lot of expenses, mainly transportation expenses, because you're unable to drive. So whether it's public transportation, maybe you take a taxi or an Uber or something like that to and from work every day, that adds up. So they pretty much just give you that allowance there of about $1,000 or so. for the month for those expenses is usually what that accounts for, among other things. All right, going back to SSA 820. Have you had any self-employment income since the date shown in the above identification section? So that's, again, going back to our date. This was all the way at the top. Whatever date you put in here. So whether you're, if this is an initial application, that's the date that they're going to be looking at. That's the date of importance. So you're either going to mark, if you mark no, then realistically you're not filling out this form. And that would be in the case of maybe like a disability work review, which is when you're already on Social Security disability and maybe you've had work, for a period of time or something like that, and then maybe it ended. There's a bunch of different situations that could play that out, but realistically, you're going to remark yes. If you question 2, if you did not work but income was reported for you, this would be maybe in the case of I would imagine, like if you had a long-term disability policy or something like that, or maybe you had like a commission that was paid after. So again, question 2, if you did not work but income was reported for you, for each row on page 1 under the section income reported for you, please provide additional information about the income. If the income reported for you was an error, please explain in the remarks section of this form. When you're finished, go to the signature and complete. And that gives you an example here. Income after business stopped, right? So if somebody owed you some money, but you stopped that business and then maybe they paid your invoice, and you weren't actually working anymore, that's where you would probably elaborate that right here. Question 3. So this is where you get into the meat and potatoes, okay? So what type of business or self-employment were you doing? What's the phone number, the mailing address? What sort of service were you providing? When did your work start? When did it stop? If it did not stop, you make sure that you write still working. A lot of people, when I worked for SSA, a lot of people would leave this blank and then not check this. So at that point, your Social Security does not know if you're still working or if you stopped. Then you'll probably get a follow-up phone call or maybe a letter or something like that. In the case of an initial claim, if you left this blank and they tried to follow up with you and you didn't respond or you didn't answer their letter or call them back or tell them what's what, they're probably going to deny your claim for failure to cooperate. Average number of hours worked per month. This is important. It elaborates more down here, but again, fill in every question to the best of your ability. If you know the answer or maybe a general consensus of the answer, fill it in. And then type of ownership, whether you're a sole owner, a corporation, farmland owner, LLC, partnership, independent contractor, this would be like 1099. So the majority of people that fall into this, an easy example would be, or I should say most common would probably be in today's day and age, would be like an Uber driver, Uber Eats or Lyft. A lot of those services, you're not technically an employee of the company, you're an independent contractor. So you have your own car, your own means of transportation, and you use their platform as a way to basically make money. Just know that you would, if that's you, you're going to fill out Form 820 versus 821. Form 821 is when you're a W-2 employee. And there's a big difference between the rules, how your wages are counted, and things like that. This section right here, question 4, is pretty much what breaks down the difference of those rules that I just mentioned. So if you're a self-employed person and you manage your own business, you need to articulate, because they do have policy that dictates what happens if you're if you're telling them you're not working, but you're in an owner or a manager's position of this company and you're working more than 45 hours a month. There's a lot of other criteria or details that start to get asked if you fall into that category. So just keep that in mind. Each one if as you're filling this out, you're going to put the date worked. Again, this is going from your onset date up at the top. So whatever months that you worked, this is where you're going to start to fill in those details. So if, let's say, as an example, your onset date was, let's just do January 1st of 2022. And I worked 6 months out of the year. So let's say I worked in February, April, every other month, right? So each one of these months, I need to write my net earnings now. So let's say they were $1,000, 850, and then 2,500. Then you're going to write, did you work more than 45 hours per month? If you mark yes, there's probably going to be some more details that need to be provided, and that will be up to whoever's taking your claim to get those details. If you remark no, those details are avoided basically because you don't fall into this kind of new category. So you want to make sure to be as accurate as you can with this information. Again, your net earnings. So for those who maybe don't know or realize, as a self-employed person or a 1099 worker, you have your gross profit. So let's say for the whole year you made $10,000 for the year, and let's say that you worked every month, right? So just an easy way to factor it, and this is how Social Security would do it if you didn't know the specifics. They're gonna average your wages is the term that's used. So if you didn't have any of these details and you just say, well, I made $10,000 for the year, if it's gross, you don't really want to go by that. So if you had any deductions, be aware of what those deductions were because it could make the difference. Let's use a higher number. Let's say 20,000, right? So if they average that by 12 months, that's going to be $1,600 a month, and per our fact sheet, anything over $1,350 is a problem. Right? So you could see, let's say you made $20,000. Now let's say that you remembered, and it would have to be in your tax filing, that you had $5,000 in expenses. Right? So $20,000 minus $5,000 in expenses, that puts us down to a $15,000 net profit. If you didn't know month by month what you made and you averaged it by 12 months, that's $1,250. So where before going off of $20,000 puts you over the amount, and realistically, they'd probably deny your claim at that point because you're over SGA, which stands for Substantial Gainful Activity. In order to meet the criteria for disability on the non-medical side of it, you have to be under SGA, which in 22 was $1,350. Well, because of your $5,000 in deductions, now you're at $1,250, so you're below. It's cutting it close. Within $100, but you're still below. So technically, your application would have to proceed at that point. So that's where the importance of these details comes into play in ensuring that you're marking your net profit and not your gross wages. Going down into Section 5, please attach basically your tax returns or any sort of pay stubs that you might have. That's where you're going to list all that. Section 6, has anyone besides yourself had a management responsibility? So kind of going back here, if you remark yes to that you're working over 45 hours, this is where they're going to get into more of those details. Okay, so on average, how many hours do you work per month? Is there anybody else that's managing those responsibilities? They're basically trying to pinpoint if you're actually, considered to be working or not. Section 7, since the date shown in the identification box below, did you make any changes in your work activity due to your physical or mental health conditions? Right? So if you reduced your work, you stopped working, you changed the type of work that you were doing, or any other changes, you want to make sure to articulate that as much as possible in this section because there's certain things that can be written off. Typically, not so much with a self-employed person. I would imagine there are some cases where that could be the case. Just because this question is there. So, maybe I can't recall off the top of my head, but normally when you're self-employed, you kind of dictate your work pace and what you're doing. But then again, in the case of an Uber driver or, somebody in a service industry that's a 1099 employee, there could be other things that come up that help you kind of window those wages down and get below SGA. So all those things are important to note, and this is where you would do that. Question 8, has any person or organization contributed to or paid for any business expenses? So this would be like, maybe you're a consultant for some sort of firm or something like that, and they give you a desk because you have a broken back or legs, or, they make it more accommodating for you to work. These could be considered subsidies basically, and again, help to reduce your wages. So you want to make sure that you follow up on that, or you articulate that as much as you can. Question 9, did you spend any of your own money for items or services related to your physical or mental health conditions? I would say the most common example of this would be medications. So let's say that you take you have some sort of neurological disorder, and you have to spend like $300 a month for anti-seizure medication. That's a pretty big expense, and it has to be reoccurring, right? So realistically, it can't be like a one-time thing. So medications or maybe Tylenol, over-the-counter stuff too. So if you had like a heart attack or something like that, or something where you need a blood thinner, if you're taking ibuprofen, right? So if you're at that, reduced wages are $1,250. Let's say that they were at $1,400, but you're spending $100 on medications every month. That might reduce you below SGA and get you where you need to be so that your claim can proceed for a determination. So this is where you're going to articulate all that stuff. They will ask you for proofs like receipts. If it's medications, you can just go to your pharmacy and ask the pharmacist for a receipt of everything for, since your onset date. You should be good to go there. And that's really the best example I can give of what those expenses might look like. Any additional remarks that you want to list, this is where you would do it. Make sure you sign, date, put your telephone number and all that stuff. And then jumping over to the 821. All right. Some of this is going to be the same. The majority of this is going to be the same. It's just going to break down differently because you're a W-2 employee. So this is where you would put the date, whoever your employer's name, Walmart, Target, whatever it might be. The year pertaining to your onset date. So if your onset date is January 1st of 2022, but you work for Walmart like 5 years ago, you don't really need to put that. That was before you became disabled, so they're not going to care. Right? The only time that you're filling this out is anytime that there's work after whatever date is in this box. So once you figure out what your alleged onset date is, per the other video that I put out, you're only covering your work after that date. Anything else before is not relevant. So you can see here, section 1 is going over maybe how, or question 1, I should say, have you had any employment income since the date above? Of course, realistically, if you did, you're gonna mark yes. If you didn't, you probably won't be filling this out. And then question 2 would be these kind of special types of pay. So did you get any back pay, any vacation pay, holiday? Basically, did you get paid anything that might look like you worked, but it's not actually, it's after the fact, after you stopped working, right? So if we used a later date, let's say instead of January, let's say it was November, right? And then maybe your boss, you got, a $2,000 holiday bonus or something like that from the employer. You want to make sure that you write in here so that Social Security knows, hey, I stopped working in November, but my boss paid me $2,000 as a holiday bonus in December. I didn't work for that. There's different ways to break that down. If it's performance-based or if it was a commission, right? So that's a different type of, there are different definitions for these things, right? So a bonus or commission, which was for work, you might have been paid later, but it was for work that you performed at an earlier date. They're going to want to know what that date was. You may need a letter from your employer to break down, it was for the third quarter of the year before I became disabled, and it just gets paid at this particular time. Or if it's maybe, you got paid your commission from December in January, but in January you became disabled. So it's, again, you're just detailing it as much as possible that, it occurred outside the period of disability that you're alleging. Same thing for royalties, sick pay, disability pay, insurance payment, workers' compensation, all those things. Speaking on workers' compensation real quick, if you have ever had workers' compensation, even if it was for a different injury or condition, if you ever got workers' compensation, you need to mention that during your application. Don't think that, I had workers' comp 10 years ago, it doesn't matter anymore. Absolutely not. You need to mention it, because what ends up happening is if that gets reported to Social Security by the Workers' Compensation Commission and you were paid a lump sum, which is usually the case if you have an award, you get a lump sum. That lump sum is prorated for a specific period of time, and your disability benefits potentially should be offset by that payment if it still falls within your prorated period of time. So it might have been handled 10 years ago, but that lump sum stretches for the next 10 years or whatever period of time it covers. And if your disability falls within that period of time, you're a workers' compensation, depending on the state that you live in, your workers' compensation or your Social Security would be offset. That always happens. Always, always, always. The reason for that, if you had a question about that or were wondering, well, why does it offset it? Is because some people, they might end up in a position where receiving workers' compensation every week on top of Social Security, they might be making more money from those two things than they did from their actual employment. And it decentivizes people to go back into the workforce. So that's why offsets usually exist like that. It's because the government wants you to go back to work because that's how they make money off of you. Section 3 is starting to go into your employers. So, if you had one employer or 5 since the time that you became disabled, maybe you were bouncing around trying to find something that suited you, or maybe you stuck with the same employer that you had and tried to make it work and it didn't. Your current or most recent employer, if you're scratching your head saying, well, current employment, how are you currently employed and applying for disability benefits? Maybe you never got fired, maybe you never quit, maybe you never got laid off. You can still have a current employer, but if you're not physically working, then you're not getting paid. So that's, maybe you're on a short or long-term disability policy from the employer and you haven't actually ended that relationship yet. You would still technically be an employee even though you haven't been terminated or quit yet. But you're not actually making any money. You're not physically going to work. So that would be the situation for that. If you have your pay stubs, make sure that you submit them with this form. I can't stress that enough because it really clears up a lot of gray area. If you can avoid, whenever possible, you want to make sure that Social Security does not average your wages because that in a lot of cases that can hurt you more than it can help you. So whenever possible, if you have your pay stubs, make sure to include them with this form. If you don't, that's when they're going to average your wages. So let's say, you got hurt last year, but you made, $30,000 for the year. They're going to divide that by 12, so that's $2,500 a month. So that would be over SGA and your claim may be denied, just again, depending on the specifics. So you always want to be as accurate as possible when reporting your wages to Social Security for either an initial claim or a post-entitlement issue like a work review. Again, pretty straightforward. You're going to put, if you know it, your supervisor's name. If you don't know it, leave it blank. Same with the telephone number, the mailing address of the location that you worked at. So if you're working retail, you want to try and list that specific employer. If you don't know the address or you're just Googling whatever, you could put the headquarters. I guess that would be fine, but you got to put something if you're saying that you worked after. Because Social Security, if you're in a different tax year, that employer is going to report those wages that they paid you to the IRS, and then they'll report it to Social Security, and then Social Security will be able to see it, and they'll definitely follow up on it. So don't try and you really want to think about who you worked for and when. Same thing here, just additional employer information. Section 4 is starting to get into some more other types of payments. Did you get sick pay? Did you get a car allowance? Did you get a stipend maybe from the employer to pay for childcare? Any per diem like meals, rooms, or rent? Anything like that? You want to articulate that stuff as much as possible because it's dwindling down your wages. And you want to get, if you're applying for disability, you want to be below whatever the SGA amount is. So that's the purpose of all this, is they're basically giving you the opportunity to say, hey, yeah, I made $2,000 for the month, but I get a $500 car allowance. They give me $30 a day or a week or something for food. So that's basically these questions are the agency trying to make sure, like, okay, well, aside from anything extra, like this is your hourly rate, this is what you made, then this is what we're going to count is what they're looking for, basically. Down under here, for any of the jobs you told us about in question 3, did you get any special conditions or treatment from the employer? So if you had like mental health issues or conditions, you're going to put in here that maybe you had a coach that, stayed with you, 4 or 5 days a week for so many hours a day to try and, make sure that you're doing the right thing. Maybe they gave you somebody maybe they gave you lesser hours to work compared to somebody else in the same position where they have to work, 35, 40 hours and you're only working 20. They give you any special treatment. They give you more time off, easier things to do, fewer duties. You really want to, again, articulate this in detail as much as possible. And it continues here. Some similar questions. Did you reduce your work, stop working, change the type of work that you do? Any more details that you might find relevant? It could be maybe your performance evaluations, something that, that your work is really declining because of your conditions. And then same here, as we touched base before on the 820, are you spending any money that is directly related to your physical or mental health conditions that can be written off? So service animal, medications, you because of your conditions, you have to take transportation every day to and from work. Whatever you can write off, you want to try and write off. Now, if it's something where, maybe you had to buy a walker, right? Realistically, a walker, you're going to spend that money and that you're going to buy that walker and it's going to last you like 6 months. That's not really a reoccurring expense. You know what I mean? So keep that in mind. If you have to run through a walker, maybe you're a heavy-set person and you put a lot of strain on that walker and it gets worn out and, breaks frequently, it's likely that it's not going to happen on a monthly basis. Then any more remarks you want to add, again, sign and date below.